We're back to one of my favorite topics today, life insurance and liquidity. In this video, I'm going to introduce you to life settlements, an additional way to convert your whole life or other permanent life insurance into the most liquid financial instrument there is out there, cold, hard cash, if and when you need it. For our loyal subscribers and viewers, welcome back. We love you guys. And for those of you new to Diamond NestEgg, welcome to the #1 place to learn about money, insurance, and retirement. I'm Jennifer, first-generation American, and I've spent most of my life in finance. Started working at banks like JP Morgan and Goldman Sachs at the age of 17, and graduated top of my class from NYU and Harvard Business School on scholarship. And now I work with companies like Bloomberg, WeWork, and Walker Edison, teaching their employees all about personal finance. So, liquidity refers to how quickly you can convert something into cash and still maintain its value. We'll be doing a separate video on the different asset classes and liquidity in the coming weeks, so don't forget to hit that subscribe diamond in the corner if you're interested in learning more about this. Our life insurance regulars on this channel know that permanent life insurance, such as whole life insurance, offers liquidity via the policy's cash value. But there's one other way that permanent life insurance, such as whole life insurance, offers liquidity, a way that most people don't know about. And that's what we'll be talking about in today's video, life settlements. Most, if not all of you watching this are too young for a life settlement. The majority of folks that seek out life settlements are age 70 or older. But given the questions that we've gotten about this lately and the lack of up-to-date info that's out there, keep watching if you think this might be an option for mom, dad, or another senior in your life who might need to pull cash out of their whole life policy. By the end of this video, you'll know what a life settlement is, why someone would choose this option to get liquidity out of their whole life insurance, and some of the risks to look out for when it comes to a life settlement. So what is a life settlement? A life settlement happens when you sell your life insurance policy, generally a whole life policy or some other form of permanent life insurance, to a third party for a one-time cash payment. What you receive is more than the cash value or surrender value of the policy, but less than the actual death benefit. Take a look at our whole life versus term life insurance video here to learn more about permanent life versus temporary life insurance, cash values, and surrender values. When you sell your life insurance policy, you transfer every aspect of the policy to the third party that buys it from you. You are still the one that is insured, but the buyer is the new owner of the policy. This means that the buyer becomes responsible for the premium payments, and also that the buyer becomes the beneficiary. Yeah, the buyer receives the death benefit, not your partner, not your children, not your grandchildren, nor any other loved one. The buyer is essentially betting that the death benefit he'll receive when you pass away will be significantly more than the cash that he's paid you, plus the premiums that he'll have to pay on your policy while you're alive. So if you think of it this way, the healthier you are, the longer you are expected to live, the less cash you'll probably get in a life settlement, because the buyer does not want to pay those premiums longer than he has to. The third-party buyer is typically a company or organization that invests money on behalf of other people, like mutual funds, pension funds, or other insurance companies even. The life settlement industry, like the life insurance industry as a whole, is highly regulated. And just as important to find a licensed life insurance agent you trust when buying life insurance, regardless of whether that's us or someone else you know, it's equally important to find a licensed life settlement broker that you trust when selling your life insurance, when entering a life settlement transaction. A life settlement broker helps you find the best buyer with the best terms out there for the life insurance policy you're selling. And yes, the life settlement broker will charge you a fee for service. But know that your life settlement broker only represents you, not the buyer, and has a responsibility to act in your best interest. If you don't have a good feeling about your life settlement broker, walk away and find another one that you do trust. So why would you consider a life settlement? Why would you want to sell your life insurance policy anyway? There are 4 common reasons for selling a life insurance policy later in life. Reason number 1, you can't afford the life insurance premiums anymore. That's why we work closely with our clients on their budget before they purchase a life insurance policy to make sure they can actually afford to pay their monthly premiums over time. While our circumstances do change as we age, going through a detailed budgeting exercise beforehand increases the likelihood that you will be able to keep up with the monthly premiums in the long run. Life insurance can get fairly complicated. So if you're a bit confused right now, that's okay. As our trademark saying goes, everyone's financial journey is different. There is no one-size-fits-all life insurance solution. So shoot us an email at jennifer@nestegg.com if you want us to help you design a life insurance policy that best suits you and your life, family, and career circumstances. In any case, assuming your life insurance policy is in good standing, meaning you've paid all your monthly premiums on time, choosing a life settlement will typically result in you getting more money from the policy than if you were to just surrender it and pull out the cash value. But again, you get less than the death benefit. Reason number 2 for selling a life insurance policy later in life. You need the money for retirement, long-term care, or to hit that bucket list. Let's consider these sobering statistics. There are currently 10,000 baby boomers retiring every day. And according to the Stanford Center on Longevity, a third of these baby boomers have $0 in retirement savings. And to make matters worse, according to the American Association of Retired Persons, the current cost of retirement is between $1 and $1.5 million. Imagine what that will cost in 30, 40, or 50 years. Combine that with a recent study from insurance giant TIAA showing that healthcare costs are rising 2 to 3 times faster than inflation. And it's no surprise that most of us will be looking at a retirement savings shortfall. The money that you get from a life settlement when you sell your insurance policy gives you additional funds for retirement and long-term care. So basically, more options when it comes to choosing which doctors to see and which nursing home, assisted living, or home care provider to go with. On a brighter note, perhaps you don't need the money for retirement or long-term care. You just want to hit that bucket list. Your life settlement proceeds give you the extra money to book that around-the-world trip you've always wanted to go on, or to buy the vacation home near the water. Reason number 3 for selling a life insurance policy later in life. You feel that you no longer need your policy. The primary reasons our clients purchase permanent life insurance is to protect their loved ones, to create an instant estate, and to build generational wealth. Check out our life insurance videos here on the important role that whole life insurance plays as a generational wealth building tool. So let's take the example of a husband, the primary breadwinner, who purchases a life insurance policy on himself so that his spouse and children are taken care of when he passes away. What happens if his wife dies before him or his children? Or in a less morbid scenario, what happens if his wife is gone and his children become so financially stable that they no longer need an inheritance from him? Going for a life settlement allows him to stop paying premiums on a whole life policy he no longer needs and get more cash in his pocket than if he were to just surrender the policy and pull out the cash value. The other example that comes to mind is of the wealthy business owner. Say that you purchased a $1 million whole life policy in your 20s, and when you retire, you sell your business for $20 million. With the $20 million in your pocket, you don't feel like you need this $1 million life insurance policy anymore. So you go for the life settlement option. Reason number 4 for selling a life insurance policy later in life. You need the funds for an emergency. Say when a family member becomes ill or suddenly passes away and you need the cash to cover these costs. Not many people understand the cash value, liquidity, and generational wealth building features of a permanent life insurance policy, all of which we explain in detail in this video here. But even fewer people realize that selling your life insurance policy in your later years is an option. And who doesn't want options in life, right? Perhaps that's why seniors, those aged 65 and older, let more than $100 billion of policies based on face value lapse every year. There are, however, some risks or drawbacks with life settlements that you should be aware of. Drawback number 1, and probably the biggest one, is that your beneficiaries won't receive the death benefit when you pass away. No inheritance, no generational wealth building. The third-party purchaser that buys the insurance policy from you will get everything. Drawback number 2. If you're enrolled or planning to enroll in Medicaid or any other type of similar government-run program, you need to make sure that the proceeds you receive from your life settlement don't put you over the program's asset limit. If they do, you won't be eligible for these programs. Drawback number 3. If you have creditors chasing you, they may try to claim some of the cash that you receive from the life settlement. Drawback number 4. The life settlement broker's commission, other fees, and taxes from a life settlement will reduce the proceeds you receive. It's best to speak to a tax advisor prior to making any decision regarding a life settlement. I'm a life insurance broker. I help you find the life insurance policy that's best suited for you and your family. I'm not a life settlement broker, but if a life settlement is something you're seriously considering for mom, dad, or another loved one, email us on jennifer@nestegg.com to see if we can help you find a life settlement broker that might be able to assist you further. Guys, we hope you enjoyed this video and learned something new. If you did, please don't forget to give that thumbs up and the subscribe button a gentle tap. We'll be back next week with another money-saving, wealth-building video just for you.